Do you find yourself struggling with how to get rich by investing as a beginner? Welcome back to the channel. Here's a mind-blowing fact for you. Did you know that the average annual return of the stock market is around 7%? That's right. And today, we're going to show you how you can leverage investing to build wealth and secure your financial future. In this video, we're diving into the topic of how to get rich by investing, step-by-step guide for beginners. Investing may seem intimidating, but with the right knowledge and approach, anyone can start their journey towards financial success. Becoming wealthy through investing is a goal that many aspire to, but achieving it requires knowledge, discipline, and a well-thought-out strategy. This step-by-step guide will help beginners understand the essentials of investing and how to build wealth over time. Step 1. Understand the basics of investing. 1.1. What is investing? Definition. Investing is the act of allocating resources, usually money, with the expectation of generating an income or profit. Types of investments: stocks, bonds, real estate, mutual funds, ETFs, and commodities. 1.2. Importance of investing wealth growth. Investing helps grow your wealth over time through capital appreciation and income generation. Inflation protection. Investments can outpace inflation, preserving your purchasing power. Financial security provides a source of income and financial security for the future. Step 2. Set financial goals. 2.1. Define your goals. Short-term goals, achievable within a year or two, e.g. vacation fund, emergency savings. Medium-term goals, achievable within 3 to 5 years, e.g. down payment for a house, paying off debt. Long-term goals, achievable in more than 5 years, e.g. retirement, children's education fund. 2.2. Assess your risk tolerance. Risk tolerance levels: conservative, moderate, or aggressive based on your ability to handle market fluctuations. Time horizon. Longer time horizons generally allow for higher risk tolerance. Step 3. Build a solid financial foundation. 3.1. Create an emergency fund. 3 to 6 months of expenses. Save enough to cover 3 to 6 months of living expenses in a high-yield savings account. 3.2. Pay off high-interest debt. Debt repayment strategy. Focus on paying off high-interest debts like credit cards and personal loans to reduce financial burden. Step 4. Choose the right investment accounts. 4.1. Retirement accounts. 401k or 403b. Employer-sponsored retirement plans with tax advantages. Individual retirement accounts, IRA, traditional IRA or Roth IRA for additional tax-advantaged retirement savings. 4.2. Taxable brokerage accounts. Flexibility, no contribution limits or withdrawal restrictions, allowing more flexible investing. Step 5. Understand investment options. 5.1. Stocks, ownership in companies. Buying shares means owning a part of the company. Potential for high returns. Historically, stocks have provided higher returns than other asset classes. Risk. Stocks can be volatile and carry a higher risk. 5.2. Bonds, fixed income security. Bonds are loans to governments or corporations that pay regular interest. Stability, generally less volatile than stocks and provide regular income. 5.3. Mutual funds and ETFs. Diversification pools money from many investors to invest in a diversified portfolio. Professional management, managed by professional fund managers. Low cost, ETFs generally have lower fees compared to mutual funds. 5.4. Real estate property investment. Buying property to generate rental income or sell at a profit. Tangible asset provides a physical asset that can appreciate in value. 5.5. Commodities. Physical goods. Investing in physical goods like gold, silver, oil, or agricultural products. Hedge against inflation. Often used as a hedge against inflation. Step 6. Develop an investment strategy. 6.1. Diversification. Reduce risk. Spread investments across different asset classes to minimize risk. Asset allocation. Allocate a percentage of your portfolio to different assets based on your risk tolerance and time horizon. 6.2. Dollar cost averaging. Consistent investment. Invest a fixed amount regularly, regardless of market conditions, to reduce the impact of market volatility. 6.3. Balancing. Maintain allocation. Periodically adjust your portfolio to maintain your desired asset allocation. 6.4. Buy and hold. Long-term focus. Invest in quality assets and hold them for the long term to ride out market fluctuations. Step 7. Start investing. 7.1. Open a brokerage account. Choose a broker. Select a reputable brokerage that fits your needs and offers low fees. Fund your account. Deposit money into your brokerage account to start investing. 7.2. Research and select investments. Fundamental analysis. Evaluate the financial health and growth potential of companies. Technical analysis. Analyze market trends and price patterns to make informed decisions. 7.3. Execute trades. Buy and sell orders. Use market orders for immediate execution or limit orders to set a specific price. Step 8. Monitor and adjust your portfolio. 8.1. Track performance. Regular review. Monitor your investments and their performance periodically. Benchmark comparison. Compare your portfolio's performance against relevant benchmarks. 8.2. Stay informed. Market news. Stay updated with financial news and market trends. Educational resources. Continuously educate yourself through books, courses, and financial advisors. 8.3. Adjust as needed. Rebalance portfolio. Periodically rebalance to maintain your desired asset allocation. Reevaluate goals. Adjust your strategy based on changes in your financial goals or risk tolerance. In conclusion, achieving wealth through investing is a gradual process that requires a clear understanding of your financial goals, a solid investment strategy, and consistent execution. By following this step-by-step guide, beginners can build a strong foundation for long-term financial success. Remember, patience and discipline are key to successful investing. Stay committed to your plan, keep learning, and watch your wealth grow over time. If you found this video helpful, make sure to subscribe to our channel for more investment tips and strategies. Also, we'd love to hear from you. Share your thoughts on investing in the comments below. Remember, the journey to financial freedom begins with a single investment. Thanks for watching.